All right, hi, and welcome back to the On the House podcast. I've got Blake Hardesty with Indiana Farm Bureau Insurance with me here today. Welcome, Blake.
Hi, Alex.
Thanks for coming on today. We're going to talk a little bit about homeowners insurance questions that some of our customers have in general, and of course how insurance and modular construction go hand in hand. So I guess first off, if you could just kind of give us a quick background on your start in the insurance agency.
I was part of a family business that I was didn't have a problem with, but I wanted to spread my wings and see what I could do, see what type of money there was to be made. And there was a job opening at Farm Bureau here in Fulton County that I jumped on, and I had to get some licensing. I had to get a couple weeks worth of classes and that type of stuff to be able to write business in the state of Indiana.
Yeah, it was quite a bit of education, if I remember correctly.
It was about 2 solid weeks of just 8-hour days sitting in class. Mm-hmm. Then the testing after that, which isn't the easiest thing, but I did it, and here I am.
Yeah, and that was how long ago, remind me?
About a year and a half ago.
Yeah, so I thought
close to 2 years.
Okay.
Yep. Great.
So, first and most obvious question that I'm sure you get literally all the time is, why in the heck do I need homeowners insurance?
Yeah. First of all, the banks make you have it if you have a loan on that house. Mm-hmm. They want to protect their investment if something happens to the property that they have a loan or give you a loan for. The second, that's not mandatory, is just protecting your everyday risk. Mm-hmm. I mean, there's risks everywhere you turn, every corner. The wind blows, there's a risk. The ground moves, there's a risk. You know, there's risks that you need to protect yourself and your home from everywhere.
Okay, so one of the first questions I have based off that is, if I'm going to go build a new home, how do I insure that home before it's built?
Basically, you are insuring the bare land with the house on there. So what I would do there, to get started is how many square feet, how many bedrooms, how many bathrooms, and then go from there and we have some third-party software we use that spits out a number of your dwelling cost. Mm-hmm. You know, what's it cost to build that dwelling?
So you're using averages.
Yes, averages. Now, you can change the bathrooms, you can have custom kitchens, you can have basic kitchens, builder's grade kitchens, you know, all that stuff kind of moves together on it. Now, when it comes to building a house, I put an endorsement on there called builder's risk, or some dwelling under construction endorsement that protects it while it's being built. I'm sure you've seen somewhere where the wind will blow and knock the frame over. You know, there's no roof on it, there's no nothing, it's just sticks in the ground. Does not happen to you. Good
but I was on site.
Good point.
I was on site at a production builder about 2 years ago, and they were doing some really cool housing, but it was like 20-foot wide total structure, and then it was a depth. You know, the lots were deep, so they were trying to fill in as much as possible, and then they were going as tall as possible. So it was actually 2.5 stories.
Okay.
And there was quite a to-do when I walked in the building, because there was a customer who had just walked in who had seen one of their framing structures tip over the week before.
Oh, goodness.
And just spill all the sticks out onto the ground. And of course, living in one of those houses, they were a little bit freaked out about how that was going to happen again. But you would have insurance that would cover that during the construction process.
Yes, and your builder or your contractor also carries, you know, depending on whose fault it is. You know, it all kind of depends. If we throw builder's risk on there to cover you, mm-hmm. the builder might want to have something on there covering themselves, because that could be a big cost to the builder.
Yeah, and they're required to.
Yes, okay, there you go.
From a business insurance perspective, they're required to cover the building while it's going up as well, and then it sounds like it gets to be a question of, you know, why did it fall and who was at fault as to whose risk insurance is going to cover.
Exactly. Then to get back to that, you know, you throw a builder's risk or a dwelling under endorsement or dwelling under construction endorsement on there. My underwriter normally with a traditional site-built home will give me about a year, and then I get an email that says, hey, we need pictures. Are they in there yet? First of all, yes. I need pictures of the dwelling up. So then I go back out and just take pictures to prove that it's done. There's someone living there.
Yeah.
And then I take that endorsement off.
Okay. So your coverage has nothing to do with an appraisal price maybe, but you can go ahead and get coverage. If I give my customers prints, they've got everything they need to get coverage from you prior to construction starting.
Yes, correct. Okay. I mean, sometimes it might not match up completely because, there's so many, I don't know what you call them in this business, but add-ons. Mm-hmm. You start building and then you're saying, oh, let's change that. Well, I don't like this. Let's do that. So it might have to be revisited once construction's done.
Yeah.
But the bank normally wants at least the loan amount on the dwelling itself.
Okay. And then once it's done, appraisal probably comes into play a little bit because then that has to do with how many options, add-ons, like you said, actually got put in the home.
Yes,
okay.
Can. Mm-hmm. I mean, if it doesn't appraise, that's from there on, we'll make it work. We'll do what we got to do.
But your goal, I mean, you're along with the bank. I guess my question is, does the construction insurance process cost any more than the finished project insurance?
Only with that dwelling under construction endorsement on there.
So that
does have a cost. It carries a cost because there's more risk for us as the insurance company while that's being built.
Well, yeah, during normal site construction, you can have property theft to an exposed building with no locks on the doors. You can have property damage. Not just theft, but someone coming along and damaging property or normal damage, whatever. That makes sense to me. So okay, so the goal in your customers' eyes should be to expedite construction as quickly as possible to reduce their financing costs from the bank and their insurance costs as well from you.
Yeah, correct.
Okay, interesting. I never put two and two together.
It's not a huge cost to add that endorsement on there, but it's a mandatory cost.
Yeah.
I mean, you want to make sure you're covered no matter what you're doing. That's what I said earlier. Managing people's everyday risk is my job. Mm-hmm. I mean, that is what I do for a living, whether it's home, whether it's auto, whether it's life insurance. There's risks around every corner.
So when I'm building, you're going to give me a blanket level of coverage. I don't have to select from, I don't have to tell you to put the construction endorsement on. That's required by the bank. That's required by you guys, obviously. As far as homeowners coverage, are there different levels, or are you guys going to, I know with life insurance, I can select a million different levels, and it depends on how I want to be covered and how long, whether or not I can get it out of it, whether or not I treat that like an investment. But with homeowners coverage, are there options like that?
There are options, whether it's an HO2 or an HO3, which I'll get into that a little bit later. Your newer homes are always HO3s. It's the best type of coverage we have. It's basically everything's covered unless it's stated that it's not. Whereas an HO2, an older home, there are named perils. Something has to cause that, whether it's wind, whether it's fire, whether it's smoke damage, whether it's volcanic eruption, those type of things.
And what's the difference in classification? Just because building codes have changed so much, or
I don't know why. It's more our risk. You take a house that was built in the 1950s, 1920s, even older than that. Those have more risk. They're getting older. They're getting, things can happen to those that aren't going to necessarily happen to a newer house. You might have electrical in there that's 80 years old versus today's. I guess that would come with code. But, what do they call it? Knob and tube wiring or something?
Something.
I think so. I'm not sure. But, predates both of us together. But, that type of wiring can break down in those are in those types of houses.
Yeah.
So that's where the difference comes there too.
Sure. Okay. Interesting. So not necessarily upgrades that I can choose, but there are differences in the homeowner's coverage depending on when they're building their house. And you guys are assuming that newer is up to code and probably safer.
Yes, correct.
Okay.
Correct.
Okay. Well, I might be jumping ahead of myself here, but I continue to get the question in my head because we're talking about different levels of code. Excuse me. So we're residential code, modular, construction. So our code level is residential, IRC, International Residential Code. Our type of construction is modular. A site builder is residential code. Type of construction is site built. All built together sticks on site. So the first question I have is there any difference in your mind? And I already know your answer because, luckily you've been active on our social media and you posted this the other day. But just for our listeners who might not have seen that, is there any difference from the insurance perspective of where the house is physically built?
Where it's physically built?
Yeah, as far as can I build something off-site using modular construction?
Oh, okay.
Or does it have to be built on-site to be insured? Or do you insure them differently? Do you look at them different?
No, there is absolutely no difference to us as an insurance company. Now there is when you start to get into, I believe they're called manufactured homes, like the double wides. If the frame is still, a metal frame underneath, that gets into a different code. You guys don't build that way. So what you guys build currently, no, there's absolutely no difference, period.
Okay, so why is there a difference with a manufactured home?
I'm not exactly sure why. I think it's basically, those older manufactured homes that have the frame underneath them, they are normally not set on a foundation. They, skirting instead of, being on a foundation. Now, that doesn't necessarily matter, even if it's an older manufactured home on a concrete foundation or on a finished basement.
Or a new manufactured home even.
Yes, or even a new one. With us, it's a little bit different. I don't, I've only worked for one insurance company, so I don't know how everybody works. If it's a manufactured home, it has to be I touched on MH or HO2s and HO3s, has to be a MH HO2 or HO3. So it's a little bit different type of policy for us. I think it's just a little bit, premiums are a little bit higher because I don't think the construction is up to, I think you call it HUD code.
Yeah,
exactly. It's up to more HUD code than residential code. So, it might not have 2x6 exterior walls. It might have 2x4 exterior walls. It might have shortcuts. Is that the word I'm looking for?
Yeah, the way I would describe it would be the regional differences in construction that residential code covers. And that's the beauty of international residential code, is they go out and they write this perfect world code, and then each local office in some states, or at least a state level, is going to be able to adopt certain levels of that code. So in Indiana, Illinois, we adopt 20 or 30 pound snow loads on our roof.
Okay.
We're never going to need any more than that. So why would you force your residents to overbuild their houses? So you get to keep affordability, but you're covered from a code perspective to make sure that you're not going to have roof or snow falling on your roof.
So that is state by state. You said it's international residential code, I think, so you put it, right?
And then each state adopts it, and then some states allow each county to adopt it and supersede the state levels as well, depending on where you're at. So Michigan's always the best example I use. Michigan has very, very great differences in the amount of snow they're going to get depending on where you're at. Are you on the west side of the state, or you're on the east side of the state? Okay. If you're on the west side of the state, how far north are you going to go? So up in the northwest part of the state, you need 70-pound snow load to properly protect your house.
Okay.
If
Makes
I
sense.
build a residential code house, again, if it's a manufactured home or a HUD code home, some people call them single wide, double wide, whatever you want to call it. If it's built to HUD code, I can go put like a 20 or 30 pound snow load up there because it's a uniform code that was built across the nation.
Okay.
So they're trying not to get, Californians to have to pay for a 70 pound snow load. They're trying a little too hard, in my opinion, to focus on affordability, and they're not taking safety and quality of code into mind. And that's where what you call the shortcut is. They're very proactively taking that shortcut to try to save money, and it's why there's a big difference in the two codes.
Okay.
So I can totally understand why there's an insurance difference, and it'll be really interesting. So the Manufactured Housing Institute has come up with this term called cross mod here recently, and it's making a splash in the industry because they openly admit that they're using the term mod in there to get people to think it's not the same thing as manufactured home. Okay. Now, a cross mod has to be set onto a permanent foundation, but it's still got a frame underneath it.
A metal frame.
Underneath it, and it's still built to HUD code, but you have to put a garage and a porch on it. So the goal of cross mod by the Manufacturing and Housing Institute is to get manufactured homes, HUD code homes, to be more widely accepted. And they did some research and found out that 42% of respondents would be interested in a cross mod home, where only 9% would be interested in a manufactured home, just based solely off the terms. So the manufactured housing industry has gone out and they're trying to, in my opinion, cross name stuff to fool people, when at the end of the day, I guess what I'm trying to get around to is I'm happy to hear that the insurance industry has something to protect that homeowner, and knowing whether or not it's either built to HUD code or IRC code home, and whether or not it's on a metal frame stuff.
Yeah. I use a lot of assessor sites and those type of things, and most of the time they will say, I forget exactly how Fulton County here puts it, but mobile home or manufactured home, if it is one. Mm-hmm. If it's just a residential code home, it doesn't say whether it's modular or site built. It just says single family dwelling.
That's great. I mean, it sounds to me like the insurance industry is on point with it, because to me it's all about what code is it built to, not how is it built. We build things off-site. Some people choose to build things on-site in the weather and the snow and the rain here recently, but at the end of the day, those two homes are going to be built to the same code, and that's what's most important.
Well, and even so, I got a question for you on that. A regular old site built builder, they can still order walls that are pre-made, modular wall systems or truss systems. Panelized. So they can still build like that. Are they marketing themselves differently?
And that's a really big conversation in the industry right now. So there's a labor shortage in the construction industry. Probably in any industry where people are having to actually do a lot of physical labor. As you and I both know, our generation was told to go to college.
Yes.
When you get out of college, you got to have an office job. You should be getting paid more money, and then you should be after college debt. Yeah. Well, that doesn't work if everybody does it, right?
Correct.
So, unfortunately, everybody's trying to do it, and a lot of people think, I can't go back into the trades now because I have a college degree, and so there's a labor shortage for that and for more reasons, I'm sure. But what's turning out to be, and you'll see it in subdivisions around Rochester, Indiana even, but especially around big cities, is when they don't have the labor, they have to turn to some kind of off-site construction. Companies like ourselves, even though we're in the construction industry and we should be considered part of the labor shortage, we employ more people here. We have a more steady workflow than a site builder who's by himself might have, because we operate in a bigger area. We can offer health insurance and 401k plans, and we get better prices on our material, and we can pay our people better than somebody who's got fluctuating workloads on site. So we can build panelized components. We choose to do it with about 80% of the home, and then ship it to the job site. And that site builder, our builder network is full of site builders, guys who build site-built homes when that makes sense, and guys who build modular homes when that makes sense.
Okay.
And then if they need to, as well, those same guys or other people in the industry can do panelized, which is I'm ordering walls, maybe floor sections that are put together. I'm ordering roof trusses, and I'm stacking those kits. So the question is just how much you want to do on-site, how much you want to do off-site, and the labor shortage is driving more and more people to off-site construction. And like I said, modular is a term that encompasses when you build about 80% of the home off-site, but panelizes when you just build pieces and pieces and then you put it together on-site.
Okay.
Yeah. Just a short rant there.
It's all right.
Don't ask me questions, Blake. I'm supposed to be asking you questions.
Oh, my bad.
So when I purchase insurance, I can include that in my mortgage.
You can't. Yes and no. You can what's called escrow it to where the bank is actually paying it for you. It is not necessarily included in the mortgage itself. If you are escrowing and you look at your mortgage statement, you are going to see that a large percentage of that goes to principal and interest, and the rest goes to escrow.
Okay, so whether I pay for it directly to you or I pay it to my bank who's paying it directly to you, I'm paying the same amount?
Correct.
Okay.
Correct.
So banks do that as a service?
They do it as a service. I'm not sure. You would have to ask Evan next time he's on the podcast or somebody. I would think they would prefer it. That way they make sure the homes they're, letting people borrow on are insured. They have more, they're in charge of it instead of the homeowner.
Sure. So, talk a little bit about, what I should shop. What questions should I ask if I'm going to build a new home? Okay, I'm a customer who's gotten onto Rochester Homes website, and I'm listening to this podcast because I'm getting ready to build my dream home. What do I do to shop for the best insurance broker I can find? Not just in our area. Obviously, if you're in our area, call on Blake. He'll be a great quote. But
that's my answer. But
if you're not in Fulton County, if you're not in Indiana, how do you start?
You already have an insurance guy, most likely. Whether it's even if you're renting, you still have car insurance. You still have maybe a renter's policy. If you trust that person, that's the big thing when you ask me is trust. Mm-hmm. You don't want somebody, not even necessarily someone you don't know. Referrals are big. Ask your neighbor if you trust him. Hey, who's your insurance guy? Is he a nice guy? Do you trust him? Is it based on price? Some people are price based. Mm-hmm. They are going to buy the cheapest insurance they can. That's okay. At the end of the day, it's their policy. Mm-hmm. They do what they want. Some people are more service based. At Farm Bureau, for instance, we are never going to be the cheapest insurance place out there. We are not a cut rate insurance to where, the claims guys are in our office. I had somebody that I knew that had a tree fall in their house, and that adjuster came from North Carolina or something. There's nothing wrong with that. You still have an adjuster, and the claim is still being paid. But do you want local service? Some people, local's huge. Some people, it's not. At the end of the day, I think I already said it. It depends on what you want out of your policy. You want to make sure that they're a good rated insurance company. But other than that, it's more the person you choose more so than the insurance you choose.
Yeah, that makes a ton of sense. I mean, if you know me personally, which I get my insurance through Blake, obviously, and since you know me, you're able to say, like, hey, Alex, that new thing you bought, like, you forgot to tell me about that.
Yeah.
I hadn't covered it for you.
Like your van.
Yeah. I forgot, okay. So have you seen any really funny stories so far in your...
I've seen a lot of stories. I don't know that any of them are funny. I mean, you get a lot of stuff that comes across your desk. You're just like, what? How's that happen? I see a lot. I'll leave it at that. You see a lot of things that just make you shrug your shoulders and say, how does that even happen? But
prior to you being in the insurance agency, you have a pretty funny story about something needing to be covered and who was going to cover it.
Which one's that? Remind me.
It was a truck. It wasn't a Dodge Ram.
Oh, okay, yeah. That was covered by homeowners insurance. We can talk about that just a little bit. I was test driving a truck, and I had taken it out to see if the kids' car seats would fit in it, because it was what do they call it, a compact truck. It was a Chevy. No, it wasn't. It was a GMC Yukon. Not a Yukon.
Sierra.
No, the smaller ones. It's like a Chevy Colorado.
Okay.
Whatever, that type of truck.
Okay.
So I wanted to make sure the car seats fit in it, so we put the kids in it and took it over to a friend's house. And they had, I always get in trouble, I think they're sheeps, not goats, right?
I don't know.
A sheep that saw its reflection in that automobile, and let's just say it beat it up pretty good.
Yes, just started ramming.
So then I called the dealership right away and just kind of asked what type of insurance policies these things have on them. Well, at the end of the day, once it all settled, the homeowner where I was at, their homeowner's insurance paid for that claim.
Yeah, and luckily they were using an insurance agent who knew them well enough to know that they had sheep on their property and had that as part of their coverage. Whereas a cut rate, somewhere they applied online, there's no way they would have known that. And maybe they didn't know to apply for, small farm insurance or whatever that takes.
Exactly.
But there could have been a gap in coverage.
There could have been. We would have got it taken care of. It, luckily, one door panel. It didn't go all the way down the side of the truck. It did some damage to that one door panel. But, worst comes to worst, it wasn't a catastrophe. But the homeowner's insurance did pay for that. It's the liability side of that. Liability is anything you do to hurt somebody or somebody else's stuff.
Yeah.
So even though they didn't do it directly, an animal they owned at their house caused the damage.
Yeah.
So at the end of the day, they were liable. The liability portion of their policy paid for that.
So the other reason to shop local, have I ever told you my parents' story about my motorcycle coverage? I haven't told you this?
I don't think so.
So I was, just turned 16, and I was already a crazy driver. And, for summers, I just want a motorcycle to buzz around on.
Oh, it's a great idea for a 16-year-old.
Yeah. Especially one who was as crazy a driver. I got my license suspended for a little while. Let's leave it at that.
Yeah.
So this was...
Plug my ears on that one.
This is pre-suspension. And anyway, I was a crazy driver. And I had worked enough I was actually framing houses on site. I was more of a go throw away the trash kind of guy, but I was on a framing crew. And I had worked and saved up enough money to buy, a $1,500 kind of piece of crap motorcycle that I could buzz around on, have fun with my buddies, whatever. And my parents said, okay, whatever you need to do, it's your money, but make sure you call and get insurance on it. And here's the number of our insurance agent. He'll help you out.
Okay.
All right, great. And they said, call him tomorrow. I don't think he's open today. Okay, whatever. So I call him the next day, and he said, ooh, insurance for a guy like you. You're young, you're 16, motorcycle.
Suspended license.
I haven't one yet. That was impending. He didn't even know about that. So I said, well, come on, how much can it be? I've got a decent summer job. Throw a big number at me. Was it going to be a couple $100 a month? Or he's like, let me run the numbers, click. And he's like, it's going to be $3,000 a month.
A month?
Yeah.
Interesting.
I'm like, there's no way I can afford that. That's twice. That's me buying 3 bikes every month. There's no way. He said, well, then I just wouldn't do it if I were you. I mean, you can't drive around without insurance. All right, fine, whatever. This is like 10 years later. I'm talking to my parents about this, and I'm telling them I still can't believe the price of the insurance, and they just break down laughing.
They lied. They told them to lie to you, didn't they?
Yeah, that was their buddy. Their insurance agent was their local buddy, and they called him up and said, ain't no way we're letting our son get on a motorcycle. You need to jack up his price. So there's another feather in the cap of a local insurance.
Yes, that is definitely true. I've not had that happen yet, but I'm sure my time is coming.
Yeah, if my
I'm
kids
sure
ever
it's
call you
coming
for insurance. Now you know what I expect.
Yeah.
So what else? What else do we need to know as homeowners, as people shopping for new construction homes about insurance? What I think is most important is and I get asked this question a lot. What does I pay all this money? What does it actually cover? Mm-hmm. I get that a lot. And, my it's not a simple answer. It's actually a very boring answer and it takes a while. But I'll go through it because that's what I'm here for. Yeah, that's right.
Every home insurance policy is made up of different parts of coverage. So you got coverage A, which is your dwelling. We talked about that earlier. That's what the bank wants to see. Mm-hmm. If they're loaning you $300,000 for a home, they want to make sure your coverage A, dwelling coverage, is at least $300,000.
But that's going to cover the sticks, the bricks, the gypsum.
Yes.
We're not talking about stuff inside yet.
No.
Okay.
No, that's there's coverage A, B, C, D, E, and F. Okay. That we're just talking about coverage A at this point. That is the dwelling itself.
Okay.
Now that does include, let's say you have a deck hanging off the back. That does include that because that's attached to your home. An attached garage, that is also considered part of coverage A.
Now, an unattached garage would not be?
No.
Okay, because I've heard an unattached garage is cheaper to insure.
It is, and it's not. It brings down coverage A. The reason it's cheaper is because, and I'll go into that in a second, it's not under coverage A. So that same $300,000 home that you're insuring replacement cost-wise, that garage might be $20,000 of it.
Okay.
So then let's say that exact same home that has a detached garage, the house would be $200,000 and the detached garage would be covered under coverage B, other structures coverage, which is pools, fences, garden sheds, detached garages, pole barns, and that is an automatic 10% of coverage A. So again, if it's a $300,000 coverage A, you have $30,000 worth of other structures costs.
Okay. Can I up that?
Yes, you can.
Okay, if I built Mr. Garage
or
a Milam Anderson garage.
Yeah. Well, Milam Anderson garage would be part of coverage A.
It's attached, yeah.
Yes, but let's say you buy an existing home and it's not enough storage, so you put up a pole barn for $60,000, but your $300,000 house only automatically covers you for 10% of that for coverage B, so you only have $30,000 in coverage.
Okay, so that's where you come in and say, we got to up that.
Yes, I do that all the time. You go to somebody's house has a big pole barn, and let's say the house is smaller, older, and it's only $150,000 replacement cost. You only have $15,000 worth of coverage on that barn. Oh, well, I can't rebuild it for that. Well, we need to look at that.
Yeah.
And it is very cheap to add on to that. Detached structure or other structures, increased limits are not expensive at all. Then that follows up with coverage C, which is personal property, your stuff inside your house. You asked about that earlier. That's your contents. Take the roof off, shake the house upside down. What falls out falls under coverage C. Your furniture, your clothes, your dishes, your basically anything that's not an attached structure, not attached to the structure. Mm-hmm. And on an HO3, that's 75% of that number. On an HO2, it's 50% of that number.
So why are those coverages different?
Why are those coverages different?
Or those percentages different?
Those percentages, I think it's because of the risk. An HO3 is a less risky thing, or less risky
that makes sense.
House or policy, to where, if that old HO2 with, correct me if I'm wrong, I think it's called knob and tube wiring, if that catches fire, we want to basically protect ourselves a little bit less than that.
Yeah.
Than the 75%.
Yeah.
So that makes a difference. So,
Can I up that?
Yes, you can up that.
How do I up that? Do I have to go around and like give you an itemized list of the contents of my home?
Most of the time, even that 50% number is probably pretty good unless you have, let's say, a collection of something.
Okay.
Let's say you have a fine art collection.
So it might be better to just insure those things.
I would schedule those on there separately. Or let's say guns.
Schedule them, does it take it off of the 50%? Or is it...
No, not necessarily. Well, no. It does not take it off the 50%. So if you have, let's say your coverage C is $50,000. Mm-hmm. And you schedule an additional $50,000 worth of guns or fine art or something like that, it does not take away from that original $50,000.
Okay, so then I would get $50,000 of original coverage and $50,000 of firearm coverage.
Yes,
and
or fine arts, or yeah. Well, no, you don't.
That's true.
If you do, be nice to him. Yeah. So when you're talking scheduled personal property, if it's like I said, if it's a collection or something of high value, or like let's get into guns for just a second. If someone breaks into your house and steals all your guns and they're not scheduled, guns are a little bit different. That does not come out of your personal property. It does, but there's a max. Okay. So if they steal $50,000 worth of guns, you might, without scheduling them, you might only get $2,000 worth of gun coverage.
Jeez.
So guns are just a little bit different.
Man, note to self.
Yes, but a lot of people, and you'd be surprised, a lot of people don't want to give anybody a list of their guns. I have people in my office daily, weekly that says, well, I got $10,000 worth of guns. Well, all I need is a list of the guns and the serial numbers and the value. Well, I'm not giving you that.
Yeah.
I'm not letting somebody come know what I have to take away.
Right.
So then with guns especially, it turns into a, what do you want to tell and what do you want to insure,
Sure.
Things like that.
Interesting.
Yeah.
So, if I once a year walked around my house with my iPhone and made a video of everything that's in the house, that's worthless to me. You guys are still just going to say 50% covered.
Correct. Well, not worthless. I mean, that's when you need to wrap your mind around it and say, okay, my house is $300,000 replacement cost. I have $150,000 worth of personal property. If you know that's not enough, we need to do something about that. Now
your autos aren't, like if your autos burn up in a garage fire and touch your house, they're covered under an auto policy. So
correct.
Okay.
It's called Better Covered Elsewhere. They have their own policy, so that policy is going to pick that up. Now, where I get yelled at by clients sometimes when things like that happen is let's say you have 2 cars in your garage in your house and something happens and it all burns down. You have a deductible on your house and you have a deductible on each of those autos. Uh-huh. That's where people get mad because, well, it's still part of the same claim. Well, it is, but it's a this is insured differently, so you still have that deductible. Yeah. This car is insured separately, so you still have that deductible. Those type of things. So yes and no. It is covered, but it's covered, better covered elsewhere under its own policy.
Okay. So my next question, based off that coverage C, is do I have to come up? Let's go back to your reference of a $300,000 mortgage. I've got $150,000 of Schedule C coverage. Do I have to come up with a justifiable list to you to get that $150,000 payout? Now,
that adjuster, that's their job. That's what they do for a living. Everybody always says, well, how am I supposed to know what I have in my house? You got I know I have a couch. I know I have a love seat. I know I have dishes. The adjuster's job is to kind of go through room by room and give you ideas of what might be in that room. Oh, yeah, I have one of those.
Yeah.
Or, man, I forgot I even had that, but yeah, I do. Yeah. Or, and sometimes those claims go on for a long time.
I bet.
I have a person that had her pole barn burned down. And it's been going on for probably 2 years. It was before I started there, maybe a little over 2 years. And she still calls every once in a while and says, I went out to the barn to get this, and I forgot I even had it till I needed it.
Yeah.
So, those things can kind of drag on for a while.
Well, I would be lucky in that case because with the amount of purchases we make on Amazon, I could look at my receipt.
Yeah, well, there's pros and cons to everything. The UPS driver probably doesn't like when you order that much stuff on Amazon, but it's job security for him too.
That's right. We're providing local jobs still. So what's is there a time limit on how long I can make that claim?
Not necessarily a time limit. I mean, us as an insurance company, we're not going to let you come back 10 years later and say, hey, I went to get my mall out of the woodshed and it burn up in the fire. Well, there is a reasonable time limit. I don't believe, I'm not an adjuster.
Yeah.
But I don't believe there's an actual time limit, but the client and the adjuster agrees that claim is closed. Mm-hmm. And even after it's closed, there might be a little trickling in, but it doesn't go too much farther after that.
Yeah, that makes sense.
Now,
okay, so what's after Schedule C?
You got coverage D, loss of use. That's basically paying for, let's say, your normal expenses on a month-to-month basis. Just for easy math, is $1,000 a month for everything that you do. Mm-hmm. And your house burns down or partially burns down, and you have to move out while the contractor is fixing it. Mm-hmm. And you're living in a hotel or rent a house, and it costs $2,000 a month. Mm-hmm. We pay the difference.
Okay.
We don't pay the first $1,000 because we're here as an insurance company. We're here to make you whole, mm-hmm. not allow you to prosper, I guess is the word I'm looking for.
Right, profit off it, yeah.
Yes, so we're going to make you whole. So you would have been paying that $1,000 anywhere. You're still responsible for that, but we pay anything above and beyond that.
That's fair.
Up to a percentage then too of that number.
So what I just heard you say is that you love homes that are built using modular construction.
Mm-hmm. Sure.
Anything to get your client back in
faster and
taken care of faster.
Yes.
Closed.
And that can be a huge expense. Mm-hmm. Let's say it's in a hotel. Let's say you don't have a place to rent you're in a smaller town that doesn't have, I don't want to say up to your standard of living of rentals, but you're not going to move into what's it called?
Just like an overnight,
Yeah, well, let's say it's a hotel.
Motel.
Yeah, let's say it's a hotel for 2 months while they're rebuilding. At $150 a night at a hotel, that can get pretty costly pretty quick for us.
Yeah.
As an insurance company to pop out that much every single day. You're talking thousands and thousands of dollars. And,
sure.
If it's a bad enough claim, let's say the house burns completely down, that's a lot more in a month. That could be up to a year.
Yeah.
So...
If you site build, yeah.
Yes, correct.
So you want me to just distribute my builder list to you directly, or do you want me to go to one of the higher ups in State Farm?
Farm Bureau.
Farm Bureau.
Come on now.
I apologize.
Then you got coverage E after that is your personal liability. I touched on that earlier. Basically anything you do to damage somebody else or hurt somebody else or somebody else's stuff. That's coverage E. You can go, I can do $100,000, I can do $300,000, I can do $500,000, I can do $1 million. I normally write houses at $1 million. A lot of times I get questioned on that. Why are you doing that? So I'll take it down to $500,000 for them just to show them the difference between $500,000 to $1 million is normally about $8 a year.
Yeah.
So why not take $500,000 worth of liability coverage for $8? Mm-hmm. And that covers more than just people. Most people that come in my office will say, "I don't need that. I just don't need it. No one's going to sue me. No one's going to." Well, what if they do?
Yeah.
That's the big one. They can come on your property and break their leg. Now you have medical payment coverage to pay for small injuries, that type of stuff. But if it gets big, you're liable for that. They were on your property.
Yeah.
Now another thing a lot of people don't know is that covers you anywhere you go. So let's say you're at Walmart and knock over a lady behind you in line and she breaks her hip. Your homeowner's liability coverage pays for that.
Really?
Let's say, and I know you know this story, let's say you borrow somebody's Jeep and drive it on the lake and put it through the ice. Your homeowner's liability coverage pays for that.
Was covered.
Yes, that is something that obviously happened to a friend of ours, but that is something he did to damage somebody else's stuff.
Yeah.
So it comes off his personal liability.
Huh. That makes me feel a little bit better.
Yes. That's probably, when it comes to liability, that's where most of the claims are probably paid.
So, but if I get in someone else's car and get in a normal everyday wreck, it's still my auto that's covering that.
Yes.
Okay.
Correct. Well, if you're in somebody else's car, insurance covers the car or follows the car. So if you're driving my truck and wreck it, my insurance is going to take care of that.
I gotcha.
It's not the person driving it; it's the automobile being driven.
And you're just going to come break my legs until I give you that.
Maybe. We'll talk about that later. Then after that, you got coverage F, which is medical payments. I kind of touched on that just a minute ago. That's for smaller injuries. That is strictly for injuries, medical payments.
Yeah.
So if somebody comes over to your house and trips and falls and gets stitches, basically Farm Bureau wants to give that money to them. Here, get yourself taken care of. Don't sue us.
Yeah.
It's also called don't sue me money.
Okay.
If it's a serious injury and goes above that, most medical payments limits are $5,000 or $10,000.
Okay.
You know, you can push them up, but if it goes above and beyond that, your personal liability is going to take over. Mm-hmm. But it's basically money allocated for medical payments here.
Okay. But it has to be some kind of like physical injury caused by your property, like a heart attack.
No,
I should not pay for somebody's heart attack.
No, and you're not going to. Yes, it's more of an injury.
Okay.
You know, somebody falls. Like I said, stitches is a good example because really, in today's medical cost world, $5,000 isn't going to pay for much.
Yeah, I think the Kleenexes in my wife's labor and delivery room was about $800.
Exactly. But that's not covered under med pay either. Come on. But yes, so that's basically your policy in a nutshell.
Okay.
You know, you got coverage A, B, C, D, E, and F.
Man, this has been really helpful information. I had no idea about this stuff.
Yeah,
so.
And you know, people that come in have no idea. You know, they just know that the bank told them they had to insure their home that they're buying or building, and so they called me and did it.
Yeah, and a lot of people say, give me the absolute bare minimum.
Yes.
But like you said, with the liability coverage for $8 a year, why
know,
don't you double it?
Yeah, but people still don't. Mm-hmm. I mean, everybody believes in insurance and different. Some people value it. Some people just get it because they have it.
Sure.
Some people want the cut rate as cheap as they can get. Some people want the service that comes along with it. You know, you can insure your house with Progressive, for instance, and you might be insured with Progressive for 40 years, and you probably have never met that agent or really even spoke to him on the phone. Mm-hmm. You know, so service is a big part of my job as well. Mm-hmm. But, yeah, in a nutshell, I know that was long-winded, but...
No, that was really helpful information. I can guarantee you that most people listening to this don't know 90% of that. I feel like I inform myself quite a bit on all topics housing, and that's something I didn't know, so I would assume a lot of people go uneducated about it. So I appreciate that coverage.
Most people do.
So what else needs to be on my radar when I'm shopping for new insurance, specifically to cover my home, or specifically having to do with new construction? Is there anything I need to look out for?
Not really. If it's new construction in general, which is what we're here to talk about. I know we've been on a couple tangents, but builder's risk or dwelling under construction endorsements are mandatory.
Yep.
For the one, I know the house you set with the fire alarms chirping. I insure that home, and I had to put on a dwelling under construction endorsement. I could probably take that off already, and that was it's probably only a 3-month-old policy. I'm not sure when did you set it?
We set that home on the 19th of December. And they are moving in. They moved in yesterday.
Okay. I could probably take that off. Now, I only know this because I know him personally. There is still some construction going on in there, some drywall. You know, I guess.
Nope, just flooring now.
Just flooring, so the drywall's done.
Nope, they moved in a week early basically because they were closing on their other house.
Okay.
And they need to get out of there, so they're doing a little bit of flooring install, and then they're done.
So that endorsement could probably come off, as long as everything's done. Is the backfilling and all that stuff done? I know there's some big piles of dirt.
The backfilling's done. The external grade's not done, and then the landscaping's not done.
Okay.
So you got that going on. So there's a little bit of dozer work. So I don't know if that affects it or not.
You know, it's really not that expensive. Mm-hmm. Until you're done, you probably don't want to take it. And the bank might not let them take it off.
Yeah, that makes sense.
You know, my underwriter's going to shoot me an email if I insured that when he got the loan. So let's say it was like November. I don't really remember. But probably come midsummer, I'm going to get an email from an underwriter that says, is this home completed?
Yeah.
And that's a simple yes or no question. There's been times that I say no, and you drive by it and they're still not siding on. You know, those are obviously not modular homes.
Yeah.
They're not modular homes, modular
construction
built homes.
Yeah. Thank you.
Yes. I don't want to get any stigmas out here. But where was I going with that? Holy shnikes, I just lost it.
Well, the question that it drove to me was, what about future projects in any home? You know, I've got a lot of customers who will buy a Cape Cod style home from us, which comes, you know, our roofs they ship flat as it's going down the road, and then we bring that roof up on site. So if you buy a 1.5-story home, that whole upper story is unfinished, and a lot of customers like to buy it that way and then put their own equity into the house later on.
Yes,
drywall and build a bonus room.
You would not need to mess with any endorsements for that
at
all. That would just be kind of part at that point. you can lock your homes to protect your contents. You can, at that point, that's construction or the contractor's risk that's doing it, or your own. But it's still, if you're finishing it yourself, which, people do.
Yeah.
I'm not the handiest person, so I'm way better at writing checks than I am swinging a hammer. But you can finish it yourself. But no, there's no endorsements needed for that at all. You're good to go.
Interesting.
Okay.
Anything else we missed? Anything else you'd like your future customers to know?
Just make sure you get with somebody you trust. I mean, it's just like any other industry. People can be taken advantage of. People, and you just want to make sure that they're not going to do that. You know, I can take any house. I don't care if it's a 800 square foot tiny home. No, I can't do tiny homes. They're still too new to the market, and I tried, and it didn't work. But let's just say it's a normal 800 square foot home. Mm-hmm. You want to make sure that they're not having you insure that for $500,000 just to benefit themselves, or because at the end of the day, something happens to that 800 square foot home. I don't care if you have $10 million in coverage on it. You're only getting what it costs to rebuild it. That's why I have to run RCTs, or replacement cost estimators. It shows your house is 2,100 square feet, finished basement. It might pop up at $350,000. Mm-hmm. Well, if I manipulate that to show $500,000, you're still only getting $350,000 out of it. Yeah. Unless it legitimately costs that much to rebuild it. If it does, you have coverage for that.
Right.
But at the end of the day, when you start turning in bills and it adds up to $350,000, you don't get that extra $150,000 to go on vacation, right? Or retire money. Yeah, that'd be nice. It really would be. But no, other than that, you just want to make sure to protect your investment. Houses are investments. Cars are investments. Your life is a huge investment that you might not even think of. That's a big one too when it comes to mortgage protection or things like that. That I have, the banks tell you that you have to have home insurance. The state of Indiana or the state of any state tells you have to have auto insurance. Nobody tells you have to have life insurance. And that's a big one that I see all the time is something tragic happens. They come in, they come into me and say, did John Doe take care of the life insurance policy you guys talked about to cover the mortgage? Because the bank's going to feel bad for you, but they're still going to want their monthly payment. Yeah. That's what I think is the most important part of my job. My boss always tells me, you can sell PNC. PNC is property casualty, home and auto, because somebody's telling you have to have it. Yeah. It's the stuff that you don't have to have that you still need, but nobody's telling you have to have it. Right. So when I think of my job, that's by far the most important part of it. The homes are important. Don't get me wrong. The auto's important. Don't get me wrong. Especially with auto, you want to make sure your liability limits are high enough. People don't understand those, and we could do a whole nother one on those, which I'm sure you don't care about. But
I do actually. You saved me money on my insurance. How long was that? A year ago?
Probably.
Yeah. I switched from a provider, and Blake came in under Indiana Farm Bureau and saved me some money. And we sat down at that time and went over, line by line, property, casualty, and talked life stuff too. And it was an illuminating conversation, just like this one is. And it led me to believe in having a yearly conversation with my, local friend, who's my, insurance guy, because, like you joked about a minute ago, you had to remind me to change my coverage when I bought a minivan.
Yeah. And that happened. You had extended coverage on it. Don't get me wrong. If something would have happened, you would have been covered. You were still paying insurance on the automobile you traded in for your new one. Yeah. So you have extended coverage, but still you want to make sure it's up to date.
Yeah, no, we were just, we had a lot going on. We were trading in a vehicle. We were shopping for the right one, and I didn't even think about it.
Yeah,
so I wasn't insured by Progressive at that time, because they wouldn't have known.
I like to sit down with people at least every couple years. Mm-hmm. Every year, I'm not going to say it's too much because it depends on the client too. If you're buying and selling, or farm clients I sit down with every single year.
Of course.
Because there's buying a new combine. Their backhoe broke down on them, so they bought another one. Those, I'm not going to say everybody's not important, but they're constantly, stuff's leaving and coming and going and buying and selling, buying new land, buying new equipment. meeting with them once a year is very important. Everybody else, I like to at least meet every couple of years. Just things change.
Yeah.
You can't buy a policy today and in 15 years expect that policy to still be up to today's standards.
Yeah.
With, like we talked about a minute ago, medical costs. What was standard 10 years ago on auto liability is not even close to standard today.
Yeah.
Those type of things. So keeping up with it, making sure you're covered, those are the important things.
Makes sense.
Okay.
Well, I appreciate having you on the show today. That was a really helpful conversation to me, hopefully to our listeners as well. How can our local listeners get a hold of you if they want to talk about their insurance needs?
They can call me. They can text me. I get a lot of phone calls. I get a lot of texts. My number there would be 574-835-2506. Call me, text me. That's probably the easiest way. You can call the office too. My job has changed a lot to where I'm not in the office very much. I do a lot of appointments at people's kitchen tables. People don't like to travel anymore. Mm-hmm. So even if it's only 5 miles, long story short, I'm not in the office anymore. So the cell phone's huge.
Sure, but I'm sure if they call into the Indiana Farm Bureau office, they can get a message to you somehow or your cell phone. Appreciate you giving that out. So,
Correct.
As always, we love to have people interact with the podcast. So if you guys have questions, we can always have Blake back on at a future date. Feel free to post those on whatever forum you're listening to the podcast on. This has been the On the House podcast from Rochester Homes, and you can find us on Spreaker and iTunes and all the other places that these podcasts are hosted. And thanks for listening, and we hope to have you back again soon.